Hey everybody, welcome back to Time Value Videos. In this video, I'm going to show you how to create a simple backtesting macro to look at a trading strategy and determine if it's at least somewhat reliable. Maybe it has poor returns over its history, or maybe it has really good returns over its history. We're going to use the simple moving average crossover, which I have 2 videos on already. The first video, I'll put an annotation on the side. The first video is how to create this spreadsheet just to run simple moving average crossovers and see if the crossover is indicative of price movement. And then the second video about this topic is how to upgrade the first one so that it's much more user-friendly. And this is the third one in the series, and this is going to be how to backtest the trading strategy itself. So what we can do is we can change the moving averages that we use. In this case, it's a 50 and a 200 simple moving average, but I could change that to a 50 and a 100. A 100 simple moving average, and run the macro, and we can see what kind of results we get. And so we get an average return per trade of about 0.5% over 12 trades. The best one being 7% gain in 2011, and the worst one being a 4% loss in 2014. And that's for lows during 2010 to 2016. You could change your date range to anything you want, and you could change your lookback period. So what I'm doing is I'm using the moving average crossover, and if I look at this chart, you can see when the moving averages cross each other, I'm counting that as a trade signal. So here and here are 2 places where they cross each other. And so what I'm doing is I'm using that to buy or sell based on the crossing, and then 10 periods later, in this case I'm doing daily, so 10 days later I get out of that trade. Regardless of the circumstances, I'm doing an automated just get out of that trade 10 days later and then see what my average results are. And so if I wanted to change this to 15, I can say 15 days later, run the macro, and I can see that actually helped my return. So by waiting longer after the signal happens, apparently it's probably this one, because this is a buy signal, and then the market just does really well from there on. So that's probably helping my strategy a little bit by looking there. And so you can run this for any stocks you want, any date range you want. You can do any moving average. You can do 10 and 20 or 50 and 100 or anything like that. So I'm going to show you how to make this. It's actually really easy once you already have the other 2. If you've already seen the other 2 videos and you have the upgraded version of the moving average crossover macro, we're just going to add maybe 3 or 4 lines, and that'll be all we need. All right, so I just pulled up the simple moving average upgrade worksheet that we used in the second video. I'll put an annotation right here again, just in case. This Excel sheet right here comes exactly from this video. So if you go and look at that, this will build this exactly, and you can use it. So all it does right now is we can run it for, let's do daily, and then we have a 50 and a 200, and let's do 1/1/2010, so we get at least some date range in there. So it'll run it, it'll pull the moving averages, and then I'll go look at the chart real quick, and you can see I have my y-axis locked, so I'll go ahead and make that automatic. There we go. So now we can see over that date range, kind of funny, there actually is no crossover at all. You can see they just almost get close to each other, they don't touch, but that's okay. So for Caterpillar during that date range, there on daily, there is not a moving average crossover. But what we're going to do is we're going to backtest this. So we're going to see anytime that trades come in, or maybe they're profitable, maybe they're not. So starting from where we left off before, I'm going to go up to Developer. I'm going to open Visual Basic, and this is the same macro we used before. I'm going to get rid of that window, and I'm just going to expand this so we can kind of see what we're working with. And so we have where we get our start and end dates and everything just exactly the same as it was before. And I'm just going to clean this up just a little bit. There we go. So if we go, and I'll knock that over there, and then I'll move it here so that we have something to look at. Okay, so we have in 1.9 and 1.10, which is I and J, we have the headings that go in there. We're going to do, I actually forgot on the last video and just left it off because it wasn't that important. We forgot to do cells 111, which is column K. So it's going to be K1 equals, and we'll just put trade with a question mark because it doesn't really matter what we do. And it's just because I forgot to fill in the heading right there. So if I run it, now it comes in. So now we have a heading, and in this case, there aren't any. So I'm going to go ahead and do something. Pretty sure Microsoft does have some, so we'll run it, and I'll double check the chart to make sure. So yeah, if we go all the way back to like June of 2015, so I can scroll down a bunch and find, there we go. So we have a signal right there. A buy signal happened in June of 2015, which is in our trade column. So now with that at least on there, we can go ahead and do some backtesting. And so what we're going to look for is if a buy or sell signal happens in column K, then we want to wait a certain amount of time and then figure out if it had taken that position and then gotten out of it, would it have been profitable or not? So what we'll do is we'll create a look back. a lookback period, and inside this, so what we're going to be doing is in the lookback period, we'll just say after a certain amount of time, how long do we want to wait after, let's say we got a buy signal, how long do we want to wait after we bought? Because we're going to assume that we buy on the signal and then wait a certain amount of time and then sell somewhere up here to get out of it. And so we want to see what the price change, which is column H is the price, column I and J are the averages. So what is the price change from when our signal happened to when we got out of that position, whether it's a buy, when do we sell, or whether it's a sell and when do we buy? Technically, if you're short, then you're covering, not selling and then buying, but same thing. So our look back period, I'm just going to put a placeholder right now of 10. We'll change it later, but at least we'll have something to work with for now. And then we want to go ahead and do equals, we'll just do, we'll call it average return, and we'll say equals average, and then we'll just do of the returns. So column L is going to be our returns. It's going to be a div 0 error right now because there's nothing in it, but we'll be able to fix it pretty soon. Cool, so let's go ahead and pull up our Visual Basic again. And so what we're going to do is we're going to fill in column L with what we need. And so if I kind of scroll this over, you can see it a little better. We have to start with column I, J, K, and then L is our next one. So I'm just going to go ahead and go over here. And actually, we can completely copy and paste what's in K. So I'm going to do that so it's the exact same thing twice. And it just got knocked over a little bit. There we go. So now we have the exact same thing here and here. And we're just going to edit this because it's so much easier to do it that way rather than rewrite it the whole thing. So I'm going to do L. I'm going to change, so I have column K, but now I'm changing that to L. And I'm going to change this to L. And then I'm going to go all the way over to the right on the bottom and change that to L and that to L. And so basically all we did was do all of the exact same things that we did before in the next column. If I were to run this right now, we just have two of the exact same column. And I'll do it just so you can see. And so these are exactly the same. But the thing is, the references move over. So if I look at column L, I'm referencing J and K, and if I look at K, I'm referencing I and J. So those are moving over, but that's the only difference. So now that's not really helpful because we don't need a buy and sell signal in column L. We need a what happens if we did buy and sell from column K. So what we're going to do is we're just going to change the formula. So it's an R1C1 formula, which means we're referencing rows and columns based on the cell that we're in. So I'm going to go ahead and come down here, and actually we can probably just delete all of it. Let's do that. There we go. So what we're going to need is, I'll write it out on here so you can see it, equals if something below, so we're not sure how far, because right now we're using a placeholder of 10, but it could be some amount of range. But so if we have a trade signal before that equals sell, then what do? Well, we want to evaluate the close, and so we're going to do something like so if it's a sell, then we're going to say we sold there, so that's going to be our ending price divided by our beginning price minus 1. Otherwise, if that signal is a buy signal, then we're going to be buying here and selling here, which means we're going to do H2 divided by, in this case I'm just using H13 as our placeholder, minus 1. Otherwise, so that's going to be, if it's a sell, then we're going to figure out what our return would have been. If it's a buy, we're going to figure out what our return would have been. And if it's neither a sell or a buy, we're just going to say nothing. And then we need a close parentheses there. And I might have missed a comma somewhere. So let's just double check. That should be okay. Too many arguments for the function. Oh, because I forgot if again. So just do an if there. Yes. Okay, good. So now that's what our formula is actually going to look like. And if I scroll down until I find a buy, oh, there we go. So I can go up here. So there we go. So now this is, if this was a buy, then we're going to do the return. And from 45 to 44 is a negative return. So we have a negative return right there. It's pretty much 0, but it's close. So now we have that kind of as our example. So we're just going to build that into our Visual Basic editor that we already have. And so all we need to do is equals if, oops, and I'm going to do it in capitals, if, and then we're looking at if a particular cell in the column immediately to the left is a cell. So all we have to do is if the column to the left equals cell. So what we're going to do is the row, and we're going to go row down a couple. So we're not sure how far. In this case, it's 10 because we use that placeholder. So we'll put 10 there also. And then the column immediately to the left is -1. I put -10. This should be +10 because we're 10 rows down is positive and up is negative because 1 to 2 is adding to 3 to 4. So positive goes down and negative goes up. And then for columns, it's negative goes to the left and positive goes to the right. So now we have if the row 10 down and column 1 to the left equals cell, and when you do an equals with a quotes in R1 C1, you need to have 2 quotes there. So it's if it's a cell, so it's a double quote. If that's a cell, then we want RC. In this case, we want I'll go back and show you so it's really clear. We want the cell H13, which is down, so it's 1, 2, 3, 4 columns to the left and 10 rows down. In this case, it's not really 10, I don't think, but however far down we're going, divided by just the same row but 4 columns to the left. So what we're going to do is the row 10 columns down, or 10 rows down, 10 rows down in a column 4 to the left, which means -4, divided by the current row, but still 4 columns back, -1. And we'll just leave that. So we have we have a comma and then close quotes. And because it's R1C1, we do double quotes. And then I'm going to close that. So we have something to work with here. So we'll just do just that by itself for a second, and then we'll fill in the rest of it in a minute. So now we have perfect. So it drops down 10 rows and then compares the prices. And so if we scroll down and find that buy, so a buy there. So we didn't do the buy. We have to find one with a sell. So there's a sell. So now it's referencing the prices, seeing what the difference is. So it said to sell at 40, and then we got out of it at 41. So that means we had lost money. So that's a negative return right there. But we'll fill in what it needs to be in a minute. So now we just do the exact same thing for buy. So we already have everything filled in for if it's a cell. So I'm just going to copy and paste everything. Not the equals sign and not the first opening quotes and not the end closing quotes. But I'm going to do Control-C to fill in everything else. And then instead of those quotes at the end, I'll just do Control-V to paste it in. So now we're saying if it's a cell, then do some stuff. And if it's not a cell, then if it's a buy, then we're just going to flip this on its head. So instead of RC -4 and R10C -4, we're just going to flip it. So it's RC -4 on top and RC +10 on the bottom of this fraction, because that's a fraction right there. Still -1, and if it's not a buy or a sell, then it's going to be nothing. So now that by itself should be perfect, and now I can go and find that buy signal, and we should have a return from there. And we'll just double check to make sure the math was right. So that's a positive return, and if I click on this, we're saying we're buying at 45.10, and we're selling at 45.45. So that's a 35-cent gain per share. So that's really not a huge gain, but at least it's something. So now we know that's working. It's less than 1%. So now that we have all that, we can go back to developer, and now we can just do a little bit of cleanup. So right now I use 10 for that placeholder. Instead of 10 for a placeholder, we want to do whatever number happens to be in A14, because it's not always going to be 10. We could put 100, we could put 5, we could put 11, it doesn't matter. So what we're going to do is we're going to replace 10 with quote and quote, and between those ands, we're going to put in whatever's in cell A14. So I'll do, if I can spell, range A14, 14, there we go. And then if I click outside of it, it'll auto space that for me. So now I just need to replace everywhere where it's the row 10 with the whole thing. So I highlight the quote and the range and quote. I highlight the whole thing and do Control-C. And then I just go find wherever there's an R10 and put a Control-V. Go find another R10, Control-V. That should be it, but I just want to be absolute certain. Nope, there's one more. Control-V, and that should be good. So now if I run it, so now over here it's looking at 10 cells down. I'm going to change this to 15 just to make it really obvious. Run it. Now I go 15 cells down is way down here. So I'm going from 3 to 18. That's 15. So that's a difference of 15. So now it worked. So now we can just we already have over here what's our average return. So I'm going to go ahead and make that a percentage so it's clear to see. And then let's do what's our max. So we can say best is right here. We can do equals max of column L. Enter. 10% return was our best. I'll make that a percentage also. Move the decimals over, and we'll say what was our worst. And do equals min. And we can do column L. Hit enter. And now if we want to figure out when those were, so that was our best and worst, let's figure out when they were too. So we can use that We just do an index and match function. I have a video on how to do index and match, so you can go look at that if you want. I'll put an annotation over here. So go ahead and click on this video if you want to go see what the index and match looks like. But I'll do a quick refresh. So we do equals index, and we want to return what the date that we're looking for is, comma, match the best day ever in our column L, which is where our returns are. And then we do comma 0 to say find an exact match. I don't want an estimate. And then I hit enter, and then I didn't close my parentheses, so I say yes. And then that gives us a date. 4140 is a date. So we're just going to go up here and change the appearance of it so it's a little easier to read. Now we got May 14th of 2013. Now I can just do Control-C, go down here, Control-V, and we have it working for both. And so now, yep, so you can see that it's referencing the right places. So now our worst return ever was a 6% loss in 2010. Our best return, actually May of 2010 might have been the flash crash, now that I'm thinking about it. Maybe not, I'm not exactly positive. It might have been May 10th, but that's pretty close to when the flash crash was. And then the best return ever was in May, that's really funny, May 14th on both of them, but that was May 14th of 2013. So if we go back and look here, we can say it's auto. We just didn't go far back enough. So we could we can change this chart and go look at something. If we go date, close, and moving averages, and then do an insert a line chart. There we go. So we can see in 2010 was our best, and that was a crossover around here. And then 2013 was our worst, and that was a crossover probably around there. So that was probably, I bet you it was that one. That was a sell cross, and then a big run up from then on. So that's how to do it. It's if you want to make it kind of look a little nicer, you can highlight and do some borders and then some coloring or something and make them look a little different so you can kind of get a better sense of all this data, because it's kind of compact on the side, and I didn't plan ahead what my layout was going to look like when I started making this, so it's just it's not super clean looking, but it'll get the job done, which is kind of what's important. If you want to just adjust this, you can just change your cell references in your macro, and you can adjust it to fit however you want it to look. But that's basically how to create a backtesting strategy for this particular technical indicator. I'll do another one on how to do a backtesting on the other technical indicators that I have. We'll do one for like a MACD and one for like a stochastic oscillator, an RSI, or all those different things. So I'll do a couple on technical indicators there too, and that should be good. So if you have any questions about how to get this working, if you have any problems with it or something, feel free to comment in the comment section below, and I'll try to help wherever I can, or maybe some of the awesome people that watch my videos can help as well. But that's it, and thanks for watching. If you like this video, let me know in the comments. And you'd probably like these ones too. Dim, which means declare in memory your own custom function to do anything you want. I think it's really awesome. We're going to declare a variable to know about in case you ever run into a time where there's not a function available for what you